This video is sponsored by Refinitiv, the company that powers the financial markets.
So, Jen Saber, we're here to talk about wacky shareholders, at least those in two companies whose share price movements after earnings, and even before in one sense, make no sense to us at all. We're going to get to Tesla in a minute. Let's start with you. You looked at Facebook. Shares are down 7% this morning, even though they beat estimates. What's going on with Facebook?
Yeah, I mean, they put out their results. It seemed to be humming along fine. The revenue was up 25%. Their costs were up. But basically, they've been warning about this for a very long time. Their shares fell 7%. And I think the concern is that their costs are rising much further than they had anticipated.
And they're going up higher than revenue growth as well, which is...
Yeah, it was, so the costs are up 34%, revenue was up 25%. They've got a host of issues that they have to deal with, obviously. And the other really kind of strange thing that jumped out at me is they introduced this new metric called family daily active users. And I was like, what is this? So basically what they're doing is they're lumping everybody in Instagram, WhatsApp, their messenger service, and Facebook into one number, which was like above 2 billion people.
So they're just going to say, here's people who have used our stuff.
Yeah.
No matter what it's... Well, what is that? That's
not
very useful.
So prior to this, they were only doing daily active users just for their flagship products.
Right.
So now, I guess they think, hey, we're going to give the market some more clarity and then just kind of lump in all these numbers and confuse everybody with a bunch of numbers. Because it's very difficult to kind of figure out, to pull this stuff out. And the reason why it's important is because Instagram in and of itself is probably huge and massive.
Yeah, you looked at this a couple of years ago, right?
Yeah, a couple of years ago I said, hey, it's probably worth $80 billion. It's probably worth way more than that now. So it's like what they should be doing is kind of clarifying each line of their business, and they're not. They're clumping it all together.
Why is that? You think they're trying to do that on purpose to say... Because obviously there's been calls with all these regulatory...
Yeah, I think in a lot of ways it
breaks up the company.
Makes it a lot harder to say we should break up Facebook when there's less clarity on just how big Instagram is, for instance.
So shares down 7% there.
Yeah.
You think it's more the cost going up, or do you think it's a mixture of that and also this weird metric?
I think it's a mixture of that. They also were warned yesterday that they haven't really seen the hard times yet. And that's coming this year with a pullback in advertising. And I think that has a lot to do with privacy regulation, and that's affecting their ad targeting capabilities. So that's where we are with Facebook. So let's talk about Tesla, which is also like a bananas company.
Yeah,
what happened yesterday?
Well, I think it's a second quarterly profit in a row, which now I think, I mean, over the past decade or so since they've gone public, they now have 5 quarters where they've made money.
All right.
It's $100 million. It's less than the previous quarter in the third quarter, even though revenue went up.
So they're making less money.
They're making a bit less money now, partly because costs have gone up, which is maybe a luxury problem. You know, they've got to grow the company, they've got to build stuff and get the factories ready and everything else. But you know, the cost of actually producing the car, the direct costs, has gone up at exactly the same rate as the revenue's gone up. So yeah, that pushes earnings up a little bit, but not enough. But also the extra costs they've got. So you know, you think research and development, regular just back office costs went up 10%, and the tax rate's gone up a lot as well because they're selling more cars abroad, where tax rates are higher. So that's all pushing that down. But also you can think, okay, that's a shortish term problem because they're growing, right? Well, yes, they are. But you think they're now worth, after a 10% increase this morning, they're worth $115 billion.
So are they like one of the largest car makers
Second
now
largest now in market cap
value?
after Toyota. Every other car maker you know is smaller than Tesla market cap, which implies that people are thinking this will dominate the space. And maybe it will, but they only produced 370,000 cars last year, and we estimated that, you know, based on where the others are trading and assuming that Tesla grows to be a traditional large car maker, it would need to be selling 3 million a year to justify this price, and that would have to get there pretty soon rather than 5-10 years in the future. Or you think it's going to become a really big provider of autonomous vehicles, which maybe at some point it will, or another car company will, but that's not happening anytime soon. That is 5-10 years away of being a mass market product, unless something changes like that. But you and me are probably going to find it weird to get in there. Regulators aren't going to let it happen anytime soon. So, you know, maybe at some point this company gets to that level. But you know, there's no way. You're basically just saying, let's hope we get there at some point and just put our money there and see what happens. But you know, that's really not a great strategy for making money.
All right. Well, there you go.
right, so look, we should probably wrap up.
Yeah,
so
let's wrap
Tesla
this up.
and Facebook, we think their shareholders have gone a bit nuts.
Yeah.
And actually, I think Tesla shares have gone nuts over the past 3 years, but there you go. Let's wrap it up there. Thanks for that, Jen. We'll be back tomorrow with more breaking views.